Hello and welcome to our channel, where we delve into investment strategies for turbulent times. The geopolitical landscape over 2023 has seen profound shifts and escalating disputes between nations. Predicting the future in these uncertain times has become an even greater challenge. Recent events in the Ukraine, Russia, and Israel have created a serious need for investors to reassess their strategies. In this video, we want to look into some valuable investment strategies that help you think about ways to safeguard your assets, even in the midst of global turmoil. To begin, let's delve into the unfolding events on the world stage. Ukraine currently finds itself embroiled in a crisis that could have far-reaching global consequences. At the heart of this situation is Russia, a significant actor that remains steadfast in its conflict with Ukraine. As we endeavor to comprehend the complexities of the Russia-Ukraine conflict, another major humanitarian crisis is unfolding in the Middle East. Palestine is grappling with an enduring dispute with Israel, plunging the region into a state of turmoil and uncertainty. The United States has also become involved in these conflicts with their support to particular nations. So, what we need to understand is, while there are speculations of a third world war, what could happen to the global economy? And what impact could it have on our investments and assets? Certainly, in moments like these, it's essential to draw upon historical events such as Pearl Harbor, 9/11, and the 2008 financial crisis, among others. These occurrences function as valuable indicators and offer a poignant reminder of the significance of proactive investment strategy planning to protect ourselves in the face of potential economic turmoil. During times of war or geopolitical instability, investors often seek strategies that provide safety and potential for profit. Here are some investment strategies to consider during such periods. Diversification should be your first step in this new war-safe strategy. Spread your investments across different asset classes, such as stocks, bonds, real estate, and commodities. Diversify internationally to reduce risk associated with geopolitical events in one specific region. Invest in countries with stable economies and political systems. So, if you might lose your assets in one investment platform or region, you have the potential to gain from others. Invest in defensive sectors like consumer staples, healthcare, and utilities, which are less affected by economic downturns. Companies involved in utility services such as water, electricity, and telecommunications often provide essential services during wartime. Government-level funds are also given to these industries to sustain humanitarian services. Infrastructure projects can also be a safe investment, especially if they receive government funding. Next, look for companies with a history of paying dividends. Dividend stocks can provide a steady income stream even in uncertain times. You should consider dividend aristocrats, companies with a track record of increasing dividends over many years. Treasury bonds and municipal bonds are often viewed as less risky options. Another age-old strategy is to invest in precious metals like gold and silver. These commodities tend to retain their value during turbulent times. Precious metals can act as a hedge against currency devaluation and inflation. Also consider investing in private equity or venture capital funds, which provide exposure to private companies. These investments may have longer-term horizons and can be less influenced by short-term market fluctuations. One important piece of advice is to maintain a long-term view. Short-term market fluctuations may occur during times of war, but focus on your investment goals and avoid impulsive decisions. Avoid trying to time the market and stay committed to your investment strategy. Being well-informed can help you make informed investment decisions. Remember that while these strategies are generally considered safer during times of war, there are no foolproof methods to eliminate investment risk entirely, so just remain steadfast. So, what can we learn from the legendary investor Warren Buffett during these trying times? Well, Mr. Buffett provides us with invaluable insights. He's guided the ship of Berkshire Hathaway for decades, averaging a phenomenal 20.1% annual return since 1965. In his wisdom, Warren Buffett suggests the best investment against inflation is to improve your own earning power. Bonds act as a safe haven while providing insulation from financial risk. While they might not offer high returns, they are a stable part of any investment portfolio. He says we should view falling stock prices as a chance to buy good companies at lower prices. Instead of worrying about short-term changes, we should focus on the long term. Buffett suggests investing in strong companies with competitive advantages. He doesn't like trying to time the market, which means making quick decisions based on current events. It's important to stay informed and avoid emotional reactions when investing. While it's good to stay invested in stocks, having some cash on hand can be helpful. Lastly, he tells us that owning parts of great businesses can help protect our investments from inflation. So, investors, remember that it's paramount to be prepared during war and financial downturns. Stay informed about global events, embrace diversification, and consider defensive strategies. Follow Warren Buffett's timeless wisdom and invest in high-quality businesses. Remember, we are sailing through choppy waters in 2023, but with the right strategies and a level head, your investments can stay secure and even thrive during these challenging times. Thank you for joining us on this insightful journey. If you found this video helpful, please hit that like button and subscribe to our channel for more valuable content.